Bitcoin is in free fall. It's almost 70% off its historic high it hit in November. Is this the right time for a short Bitcoin ETF? Let's ask the man who did it. Simeon Hyman is the global investment strategist at ProShares. He launched the short Bitcoin strategy ETF last week. The symbol is BITI, and that complements the long Bitcoin futures ETF that ProShares launched in October of last year. My old friend Tom Lydon, vice chairman of VettaFi, is also joining me on the set at the New York Stock Exchange, and Andrew Chanin, CEO of Procure AM, will be joining us shortly as well to discuss his new global disaster recovery ETF. It's the first ever of its kind. Fascinating ETF. But let me start with you, Simeon. Explain how this short Bitcoin ETF works. These are tied to futures contracts, and I presume this is the exact inverse again. So Bitcoin is down 1%, it's up 1%. Just remind our viewers how it works.
That's exactly right. So this is the companion to BITO, the long Bitcoin strategy ETF using futures, as you described, that we launched last fall, one of the most successful launches in ETF history. And we wanted to offer investors the opportunity to have the short exposure with BITI. It is indeed -1, so it provides the inverse of the CME futures index, but always important to remember that that's rebalanced every day. So every time you wake up in the morning, you know that it's going to deliver. The intent is to deliver that -1 times the performance of Bitcoin for that day.
Yeah. Tom, a lot of us, and I want to remind everyone what Simeon said there, it's reset every day. We have to keep telling people about that. You don't do that over a month. It's what every day you reset here. But, a lot of people thought that crypto would be a non-correlated asset somehow. And that it was an inflation hedge. This is proven to be nonsense. It essentially moves, you mentioned this before, essentially like growth stocks, essentially.
Yeah, and that's it. I mean, a lot of people thought it would be a way to diversify, fight inflation. It hasn't been the case. However, a good thing that's come from this has been this. Advisors are interested in crypto ETFs because they can keep them on the platforms where they manage money for their clients. We do, with Matt Hogan and the Bitwise team, every year a survey, and more advisors and their clients are interested in cryptocurrency. Now, with the fact that we've got ETFs and they're available on platforms, and we've had a great deflation or decrease in the value of ETFs, more advisors are getting in. Simeon, I know we've had a reduction in the total assets that we had in your ETFs, but at the same time, we have more shares. So more, not only self-directed investors, but more advisors are going in. For the first time, advisors are feeling comfortable taking positions for clients. Are you seeing that?
Yeah, and what we've seen, Tom and Bob, over the last several months with the, let's call it the volatility in Bitcoin, is we've seen more and more challenges in the spot market. Headlines with regards to the lending platforms, but then even in the simple exchanges, that a client account in a crypto exchange may not be segregated in the event of bankruptcy. And meanwhile, as we've seen these complications in the spot market, the futures market has really matured quite nicely. So those roll costs that folks were concerned about have actually shrunk, as in stark contrast to the spot market. So when you put the futures with the clearinghouse in conjunction with a 40 Act ETF with segregated assets readily available, it's certainly no surprise to us that that's an opportunity that's well suited to financial advisors and anyone who's looking to simply have this exposure in their brokerage account.
You mentioned the spot market, the spot Bitcoin market. SEC Chair Gary Gensler was on our air this morning, again pointing out that crypto tokens would fall under the SEC's jurisdiction. He said nothing, though, about this long-delayed, endless spot Bitcoin ETF. Can you just comment on that? Are we any closer to realizing that? Is that even important at this point? Because that would have to go through Gensler, and he's been quite skeptical.
So I don't think we know. I think what we can observe are the challenges in that spot market that we were just talking about. So one can imagine that that's certainly one of the things on the minds of the regulators, but we really don't know. But again, the one thing that we do know is that futures have become a particularly effective method for exposure that, if anything, have been becoming more mature, more effective and more efficient marketplace. There's no storage costs in Bitcoin, so there's really no reason from a kind of theoretical standpoint for there to be any real meaningful cost involved in the rolling of those futures contracts and the ability of them to track track quite closely the Bitcoin market with all the other attributes of that futures market, I think really do stand in contrast to spot. And again, they could be resolved. We don't know when, but they're not there yet.
So, Simeon, the fee for this, 0.95%. Now, that's high for an ETF, but I know the cost of shorting Bitcoin has been very onerous in the past. Some of these exchanges have restrictions on them, and I know the financing costs can be very high. Is it your argument that this is a more efficient way to go about shorting Bitcoin?
Absolutely, Bob. So if you're now focusing on BITI, on the opportunity to have short exposure, in addition to all the benefits of futures and ETF, we do think this is a very efficient way to go. As you mentioned, it's tough to pull this off. And indeed, those borrow costs, if you were to go on margin in a brokerage account, even if you could do it, which is a challenge, the borrowing costs are as high as close to 20%. So we think those 95 basis points are going to prove to be an attractive avenue for folks looking for this exposure. And we've seen lots of activity. It's traded already about $100 million since the launch last week.
So, Tom, you pointed out the current price to produce one Bitcoin is what, $15,000 to $18,000?
$15,000 to $18,000, yeah.
Right, we're at $20,000, $21,000 right now. That's getting uncomfortably close. What would happen if we went to $18,000? What are the implications of saying it's $15,000 to $18,000? We're not far from that.
We've watched the gold market for a long period of time. It costs about $800 to $1,000 to get an ounce of gold out of the ground. Prices get down to that level or below. Guess what? People shut off the machines. You wonder if the same thing would happen in the Bitcoin marketplace.
Yeah.
We haven't been there yet, but you got to assume some of that would happen.
Now, Simeon's making a very interesting argument here. I keep pressing him on the Bitcoin ETF, and he keeps sort of pushing back and saying, you know, Bob, I'm putting words in your mouth, Simeon. It doesn't matter because we've got a functioning futures market. Yet the Bitcoin community doesn't seem to be very happy with this. They still want a Bitcoin ETF. Does it matter, or am I just pushing against the wind here?
There's a certain cohort of the industry that would like to see it, and I think people felt that way 6 months ago. Today, as far as institutions or financial advisors, especially with the ability to look through a futures market and buy products based on futures on platforms, I think they're fine. I mean, folks like ProShares have done a great job. There's really, really tight correlation there. They're doing exactly what they're supposed to do.
Yeah. So I didn't want to put words in your mouth, Simeon, but is that your sort of position, that it's almost not that important whether we get a spot Bitcoin ETF or not, because the futures Bitcoin ETFs are functioning so well?
Great.
Suss that out for me.
BITO and BITI are both doing exactly what they should be doing. So we do think that that's providing a lot of the opportunity that investors had been waiting for. If there are other maturations anywhere else in the crypto universe as time goes on, we'll see. But they're not there yet, and the futures-based ETF, BITO and BITI, are really worth folks taking a good hard look at because they do deliver the exposure and lots of structural advantages.
Are you surprised, Tom, that we had such good correlation between Bitcoin and the futures? Because that was the argument, 8 months ago. Everyone was saying, we don't want this because there's too much variation between the spot and the futures. And we see it's actually trading a fairly tight range. Is this an historical anomaly, or?
Well, the futures market is something that the ETF industry has been a part of for a long period of time. You've got the plumbing down. You've got the market makers, the APs, all doing what they need to do. And it was all up to them to make sure that they performed and that those spreads are tight and that the correlation is accurate. So it wasn't just one company. There are many companies that are doing this, and it's important that they stay tight. If one falls out of favor and doesn't perform in line, they're not going to get the money.